Good morning, everyone, and welcome to another live trading webinar. I hope everyone has a great time so far. So, is everyone doing all right? Are you ready to start a new day in trading and uh, see what the markets will reveal for us this morning, right? So let me just rearrange a little bit the screens here. Up. Yes, I think that's okay. So let's start with the first one, guys, and that's the Australian dollar against the US dollar. And what's going on yesterday? The market opened with this gap to the downside and it closed bullish. So therefore today there is expectancy for this market to continue moving upward based on this candle pattern here, but in reality there are a few components that maybe they are showing the opposite, like the RSI here, it's below 50, that's considered as bearish. If you are trading on the daily chart, then you have to refer on the weekly chart. And on the weekly chart here, it's a solid bearish candle that can help sellers to push price lower. Okay, so keep that in mind. And because maybe that's what we're going to see happening in this market. Good morning, Nick. Thanks for joining us. And of course, everyone else that they are on the live in both platforms. Guys, feel free to ask anything you need. Use the chat box below. I just dropped a hello, and on YouTube as well. So let's continue. Rob said, good morning, everyone. How is the day going? Awesome. Herbert from Adelaide. Hello, sir. How are you doing today? I'm very well. Thank you. Lisa, great day to you. Adam, hi, guys. Which pair are we checking out today? Adam, we're going to check everything out. Penelope said, does the sound working? Hello, everyone. Guys, does the sound working? Just please drop a quick yes if everything is fine. Image, sound, check. Please let me know. Working well. Okay, great. So as we said about the Australian dollar and the US dollar, the weekly chart shows that the sellers can take some control in the market. The daily chart yesterday printed this reversal price action, leaving this bottom here. That's what we call a swing low. Maybe we're going to see some more bullishness, maybe not. That's where I prefer, when I check the weekly chart, I don't like to go on the NRG. That's something that you're not going to see it, to be honest, everywhere, because not many people understand this, not because they lack of knowledge, but they maybe they don't have that trading hours experience in order to get that. The weekly chart, guys, and the daily chart, they are only 5 candles apart. They say that use the higher time frame to map the market and use a lower time frame to enter the market. Now, if I need 5 candles to create a higher time frame, like the daily chart to create a weekly chart, then how is possible to get into the opportunities in a line with a higher time frame? If I wait for these 2 time frames to always be in alignment, what I want to see is the higher time frame. If you check the weekly chart, yeah, that's awesome. what I want to see is the 4-hour chart to find opportunities. Okay, I rarely get good opportunities on the daily chart in align with the weekly price action. Like if the weekly is down and the weekly is down and the price action on the weekly is bearish, so I will go on the 4-hour chart and I will find this kind of pattern that is lower highs and lower lows, and I will try to enter either on the breaks out to the downside, or I will try to find a strong price action around the resistance to enter short. And that's a key thing in your trading. Okay, keep that in mind. Like 2 days ago, sorry, like 3 trading days ago on Thursday, the weekly was down, and here we spotted a change of character in this market. We had these higher highs and higher lows, and then the low here got violated and decisively closed below. That's the Australian dollar against the US dollar on the 4-hour time frame. And then we saw this bearish candle, but it preceded a doji. That's a strong reversal because it has very minimal body. Okay, so at this point here, if you were in front of the chart, that was a good tradable signal. It gave more than 2 to 1, so we were happy, we took it, and that's it. All right, so it's good if you watch the weekly chart for higher time frame to execute on the 4-hour chart. That's how I teach it on my private coaching, and that's what I include also on the trading lessons I am creating at this stage. So from Thailand, thank you for joining us. Alvin asked, do you think it will reverse when it gets to the support? That's a great question. When the price gets to this support, because if you go on the higher time frame, this support is a weekly support. We do expect a kind of, and again, this is a point where many traders, they get lost. They expect that if price touch at the support, it's gonna change its trend and it's gonna create always support they associate with an uptrend. That's not the case. The support, we use them we use them in 2 ways. Either to take profits, that's the first TP, or the second, we use them to scalping for a little bit of move against the prevailing trend. Because let's say price touch at the support, let's clean a little bit the screen. Let's say that price come at the support and push upwards as expected, but then it comes and create a double bottom. Then what? So if we're going to decide to buy the support or a price action at support, we have to understand that there is a high chance that the market is going to come down and continue the trend, because every trend to be continued, it has to penetrate through all the support, right? So let's keep going. Next one on the daily some people yesterday, they said that they are trading on the hourly time frame, on the 15-minute chart, and they look only the 4-hour chart. That's fair enough. If you guys are monitoring the 4-hour chart for market structure and you enter on the 15-minute, absolutely fine. It's something a little bit different than from what I do, to be honest, based on my trading experience. But again, I'm gonna come back to this subject another time. Okay, I want to use this. Maybe I can create a video exclusively for that concept. Okay, for the correlations and all this stuff. Questions. What other pairs do we have to check out? We're gonna check all the majors. Mostly check out the weekly. I use the daily since I'm a swing trader, Morgan. Awesome. I do use the 4 hours mainly for entry. That's fantastic. Actually that's a great way to trade, in my opinion. So Euro US dollar on the weekly chart, we had this reversal price states between the blue 10 period moving average and the red 40 period moving average. So on the weekly chart, there is a downtrend. Price makes lower highs and lower highs. We don't have lower lows. We don't have a lower high yet, but this is a strong sign of reversal. So on the 4-hour chart, we can look for shorts. Let's clean this one here. If the price breaks below these lows here, below this swing low, the congestion, let's say, we can start looking for shorts, or at this resistance area here, or if you like to map it as a zone in this area here, you can start looking for some kind of divergence, because on the time frame we want to execute, either we want to find a strong price action like these pin bars to sell them, or bearish engulfing, or we want to see bearish divergence on the indicator. Guys, I know many of you've been told to never use indicators. They are all lacking. They are this, they are that. Each and every indicator has a great meaning if you know how to interpret them. Okay, so give yourself time to also understand, because technical analysis, it's based on solid patterns, and that also includes some indicators. We don't trade the indicator, and write this down. Remember that we never trade any indicator, never. We trade the price action in the market structure, but the indicators, they give confirmations to we can use them to validate some signals we get from the price action. Okay, so if the price comes at this area here and there is no price action to show that the market can reverse, and also the indicator, it's in the RSI, it's in an overbought condition, it means it's in a strong developing of a trend. So if you don't know how to read the indicator, then it's going to be useless in your perspective. Okay, but if you know how to use it, you come to me. I can privately coach you if you want, or I can include I will include everything on my course. Hopefully in a month or so it's going to be ready. That's fingers crossed. Okay, because it's going to be a big course. It's going to be a lot of hours you can watch, breakdown in 10 to 15 minutes each chapter. So I'm going to explain everything with live examples and all this stuff. So for now, if we are looking to sell the euro against the US dollar, we have to wait for the price to come somewhere at a strong area of resistance, or like this one here, or if the price, if we don't get it right, and the price breaks above here and continue moving to the upside, then if it surpasses this R1 resistance, we will be looking for ways to enter the market long, because the market shows clearly that it changed its bias. Okay. How many indicators do you use, sir? I just use the RSI indicator, to be honest, to validate some signals. When I enter the trades, I use Bollinger Bands, because that's a part of my trading strategy, and it's a trading strategy I offer to the people I coach as well, and I can offer them to you guys from now on. That's not a problem. And on the weekly chart, I use the moving averages just to make it easy to map the market. That's all. I don't trade the moving averages, but I know their interpretations, so I know how to read them. Okay, for example, now on the euro US dollar, price is congesting between two moving averages, rejecting the low, rejecting the slow, and rejecting the fast moving average. Pretty much of indecision. Okay, but based on this lower low structure, we can see some more weakness. However, we don't have a lower high yet, so it's still the market in a development. All right, that's why we are trying to create possible scenarios about this. So let's keep moving. The pound against the US dollar, and as I told you guys because I'm a certified financial technical analyst, I provide official technical analysis to firms and individual traders on a daily basis. And I just did analysis today on the pound US dollar. That's why you see a bunch of lines and marks on the chart. So on the daily chart, we had this bullish candle here. And if we go down to the 4-hour chart, we can see that the price broke to the upside above a downward channel. And it created a trend line at this point, connecting these low points. And there is room for the price to move until the first area of resistance that is found to be around 1.2300. Now, if we're going to break above, then we expect the price to move higher, okay? But if we're going to break below this tentative trend line, then the things become a little bit more tricky. So, New Zealand against the US dollar. If you prefer on the weekly chart, we see the price making a strong bearish and close below the 10-period moving average on the weekly. Now, I would like to grab your attention on this one. Can you guys see the difference between the Euro US dollar on the weekly chart and the New Zealand US dollar? The New Zealand US dollar already created this lower low and a new lower low. Therefore, this lower low defines this high as the lower high. So there is a lower high and a lower low, where on the euro against the US dollar, there is only a lower low. We don't have a lower high yet. We need to create a new low for this leg to be considered as a new downtrend. Plus, on the euro US dollar, the last week price action ended up being between the two moving averages. On the Kiwi, though, it broke and closed below the 10-period moving average. That means there is more weakness on this currency pair compared to the euro. Do you guys understand it? That's correct, Bob. Len, it looks most of the same with the euro. Yes. So which means the New Zealand, it's a lot weaker. Wheel, spot on. That's right. So the New Zealand against the US dollar, it's weaker than the euro against the US dollar based on this chart here. If we go down to the 4-hour chart, we see that the market is in a downtrend. Do you guys see that? So we are, based on this one, we can even go lower to the hourly, to the 15-minute chart, and trying to find these pullbacks to get short. Find pullbacks to get short. That's ideally how we trade the trends. Okay, then we have to plot our supports, and there, everywhere. Okay, again, that's something that I do on the daily basis when I provide technical analysis. So overall bias for the Kiwi is short as well. Next one, USD Canadian dollar. On the weekly chart, price closes above the 10 and the 40 period moving average. You see that the moving averages, they are getting apart from each other, and that's very bullish. There is an area of resistance here, and also we can use the previous candle high as a resistance. On the 4-hour chart, the price now, it doesn't show us any readable, recognized pattern. You see, it just moves, came from here, it went down, it came there, it lost its structure. It doesn't show anything here that we can understand. Like if I go back to the Kiwi against the US dollar, do you guys see that the market has a structure here, lower highs and lower low? Do you see the difference? So it's a bit more clear, this one, to read it. For this one here, I will be definitely looking for some longs, but again, very cautiously. USD CHF on a 4-hour chart, it was this head and shoulder pattern. It looks like the neckline is still respected after 1, 2, 3, 4 touches. Let's see if the price, I think we can channel also the price at this point. Yep, that's a valid channel because we have 1 touch, 2 touch. You see, guys, you don't do channels like this or trend lines. You never cut the price in the middle. If the price is going to cut afterwards the channel, it's been created, because you create a channel, you get the first 2 points. So here it was a false breakout, but nevertheless, we're going to expect to see some weakness here. Let's see what's going to happen. Okay, on this one here, USD Japanese yen, if you were around on previous webinars, I told you about the Japanese yen during some New York Open or during London Open. There is this, you see, they leave these tails behind, this all this stuff. So it's something that get me a bit skeptical about this currency in general. I think the USD JPY could break any minute from now. Yes, let's check what the chart tells us. So on the weekly chart, there is a strong resistance here, if you guys can see that. Strong resistance found around this 150-165, and but everything scream bullish. Okay, now on the 4-hour chart, the price, let's zoom out a little bit. No, we don't have any reference. On the 4-hour chart, yesterday bearish engulfing, and the price didn't move any lower. So usually when there is a strong resistance, the price either it's going to sell off aggressively or it's going to come back for a double top. Let's see what's going to happen. If you guys decide that you want to sell here, it looks like that stop losses, they have to be above the resistance, just to give your price some room for fluctuation. Okay, but if you want to be more precise with entries, then you have to wait for some kind of chart patterns, price action patterns to appear. Next one is the Great British Pound against the Japanese yen. On the weekly chart, there is another strong resistance here. And on the 4-hour chart, we see that price makes higher highs and higher lows, if you follow what I'm saying. So higher highs, higher lows. Now it's on the impulse move, so I'll be waiting for some kind of retracement if I decide to be a buyer. But on the euro, on the other hand, euro against the Japanese yen, it's in a solid uptrend. Looks like a breakout can occur from a minute to minute on that one. Let's check on the weekly chart. You see, guys, we don't have any reference so far. We have to zoom out a lot to find some resistance. Just for this webinar, I will just put the resistance somewhere here. But again, we're not gonna buy from 162 and target 169. Okay, that's 700 pips or more. Okay, so prices, they don't shoot up in a straight line like this. We have to respect the retracement. Tiffany asks, can you still look for some bullish trade on the pound JPY? Absolutely. On the pound JPY, even if you guys go on the 15-minute chart, you see that price broke above these highs on the intraday. That was during the Asian session. So if we're going to stay above this area, then I will be looking for some kind of, I want to see a reversal whenever it appears. And let's say if the price travels a little bit to the upside, then a reversal appears, maybe around the 0.618 of fib or 50% of the fib retracement, we can get some good entries. We can keep an eye on that. Same with the euro against the Japanese yen. But again, for the euro, if you guys are long now and you bought it, understand that there is a resistance area here. Next one, let's cover the gold. Malcolm said, I also like to see the price make some more bullish to the upside for sure. Absolutely. Marley said, noted. Yeah. Doug said, is there a reason why you are not using Bollinger Band strategy anymore? No, I'm using Bollinger Band strategy, but I think I'm on another template here on technical analysis. Yeah. Bollinger Bands, it's the way I enter the market. It's not the way I do market analysis. I use it as filter to get my entry points more accurately. Okay. So for example, on the gold, on the Bollinger Bands, let's say I don't have the Bollinger Bands, and I see this false breakout, this candle here with a false breakout and a doji gravestone doji candle. That's how we call it in technical analysis. So if I'm a bit skeptical, maybe the price is going to come above this area, so maybe this is going to continue with a false breakout, I will put on the Bollinger Bands, and I see that, okay, the price got rejected at the upper band. It means there is a very high chance for the price to continue moving lower. So it validates my signal and I will take the trade. All right. Or this one here. Yeah, price is in a downtrend, but there is a bullish engulfing. Price traded outside of the band. It's the kind of expression we say we walking the bands, and then at some point it stopped. It came inside the bands, leaving with this leaving behind this lower rejections. So bullish engulfing here, that will be a good signal to take it. That's how I use the Bollinger Bands. They are a part of my strategy to enter the market. Okay, the gold, we said on the weekly chart that price broke below the 10 period moving average, and that can be bearish. Okay, but again, cautiously, here on the Bollinger Bands, there were multiple rejections and good price action on Friday to sell it. Now the RSI printed some bullish divergence. As you guys see here, price makes lower low, RSI makes higher high. So we have to wait for some kind of resistance to appear, maybe also a double top somewhere here before we start selling again, just a bit more cautious. WTI on the weekly chart, price broke below the moving averages on the 4-hour chart. That was a long travel for the price, so we wait to see the price come somewhere around this resistance where price can find some more sellers. Okay, that's why we see these higher highs and higher lows. There is a 61.8% at this point. Also the resistance here, so I think the price is going to travel somewhere there, so I'm not in a rush to sell it now. Again, if price won't come at this area and it continue moving lower, let it be. It wasn't part of my trading plan, so I don't give up on my trading plan. I trade my trading plan, and yeah, that's the beauty of trading, when you have consistency and when you know precisely exactly what you are looking from the charts. A lot of questions. Why are you planning, Adonis said, why are you planning to sell there? Please, we are talking about the WTI because there is a broken support here, and based on the rule of change of polarity in technical analysis, we know that if price it's gonna move to the opposite direction, it means upwards, there is a high chance to come right at the broken support because it's going to act as a resistance right now. Julie, and what time frames do you execute your trade, please? On a swing trading, I execute on the 4-hour chart, but when I do intraday trading, I execute on the hourly and 15-minute chart. So I do both. Brent said hello. Hello, Brent. Bob asked, when a support act like a resistance, what does that mean, please? When a support act like a resistance, like in this case here, let's say this is the support, and if it act as resistance, it means we're going to confirm if it's going to act as resistance when we see rejection of the price action at this area. But if we see the price move all the way and penetrate and close above this resistance, then obviously this wasn't a strong resistance to hold the price. Resistance means it's going to resist to the price move to continue moving to the upside, and support means it's going to resist to the price when it's continue towards the downside. Alexander said, I think you are a very good trainer. Please, how long have you been trading? I'm trading for 11 years now, Alexander. Thank you for your kind words. Very clear and plain analysis. I'm enjoying this session. Thank you, Cynthia. Appreciate it. I hope you guys be able to join on a daily basis, because we don't only analyzing the markets here at MarketMinds Mastery, but also we provide with the highest education, knowledge, and technical analysis stuff. Guys, any other currency pair you would like to see analysis today, please type it below, because in about 2-3 minutes I will wrap up. Next one, German 40 daily chart. We are still within this area of resistance. So for our chart, let's see, what is this price pattern here? That's nothing. It broke, false break, so this high is still respected. So this high is still respected here. Let's see if price breaks above this resistance and stays above this resistance, it's going to make it a clear trade, and you guys can keep an eye on that. All right, if we're going to remain above this one, then we're going to look for, we go to the 15-minute charts, maybe 30-minute charts, and we're going to look for some corrections like this. If price is going to break above, it's going to come down at some point somewhere, and it's going to give us a rejection with price action, so we can take a long trade. Tyler, you said, Tyler, I used to see your analysis on Admiral's YouTube page. Yeah, that's correct. I used to work for Admirals before, or maybe it was someone. No, it was me. You can follow my YouTube channel now here at MarketMinds Mastery. You guys can see, if you go on my profile here, I listed all the channels you can follow and contact me for anything you need in trading. Thank you so much, Tyler, for joining us here. Hi, Dan. We are going to be looking for corrections in the Bollinger Band. Yes, absolutely. Darcy, I would like to see some more of your analysis. Absolutely. We're going to be here on a daily basis. Cases, sorry, I will follow your YouTube channel. Sure, I will follow your YouTube channel. You're very welcome. Owner, I'm very interested in pound Australian dollar analysis. Let's do it then. Pound Australian dollar. Which section? Section 3. Pound AUD. So on the weekly chart, price broke and closed above the previous week high, and that's very bullish. So I mark a resistance based on the weekly chart here. Then on the daily chart, price is still bullish. If we want to enter the market, we're going to use a lower time frame, and here price makes higher highs, consolidate at this point here and it break above. So at this point, because price is on the run, if you want to find corrections, you have to go to lower time frame. Like if you go on the 15-minute chart, you see that price created this impulse move. So we can wait for some kind of red candle to appear, and afterwards we will be looking for the correction and we get ready to go long. Okay, but that's bullish, very bullish bias for today, until there is room, until there are about 50 to 60 pips, until price reach this resistance area, the resistance. Okay, this is a top-down analysis, so we should only look for long, ideally, yes, unless you want to do some scalping on the 15-minute or on the 5-minute. If you go on the 5-minute chart, and you can use these areas, these red candles, to get to the short side. But let me tell you something else from the broker side. The Australian dollar, pound Aussie, euro Aussie, pound New Zealand, euro New Zealand, New Zealand CHF, Aussie CHF, which one? Okay, mainly these, they have high spreads, wider spreads if you prefer. So what does it mean, wider spread? It means when you try to enter on a lower time frames, like 15-minute chart or 5-minute chart, and you're gonna go for 20 pips, if you put a stop loss on 20 pips and a take profit on 40 pips, if the spread is 6 pips or 7 pips, imagine that you just need few ticks against the against your direction to find yourself in a losing trade, not because the price doesn't do what you predicted it's going to do, but simply because the spread is going to touch at your stop loss. Guys, that must be very, very clear when you're trading. Okay, you have to understand this. The spread, it's there for a purpose, and you have to know which currency pairs to use for intradays and which not. New Zealand Canadian dollar. Let's do the last one, Kiwi CAD. Based on my analysis, I sent out this analysis yesterday, and we had these predictions for short because of this. The weekly chart stopped, the price on the weekly chart stopped at the 40-period moving average, so we expect the price to move lower at this S1 support. On the daily chart, though, it's a bit more clear, but if we go on the 4-hour chart, we see that price, that was the bearish candle that caused the price to move lower. So I'm still with short bias here. If price is going to come at the S1 support and breaks below, then I will be looking forward some trading opportunities until it's going to reach the S2 support. Thanks for the session. The price rejected the moving average, correct. Vic said thanks for the session, I have learned a lot. Guys, I'm new in this platform, to be honest, so I will appreciate if you leave some feedback on my channel. If there is a feedback thing or something, I will appreciate. Is this a reversal or a retracement? Which one, Louis? Another topic we have to touch. What is a reversal and what is a retracement, and how can a trader separate these two? I will explain that on another session. Okay, guys, I will create some educational videos for you. Just give me some time. As I said, in this platform, I'm fairly new, so I also have other trading commitments. So we're going to sort out everything, guys. So that's all from me today. It was a privilege and honor to be live on this webinar. I hope you learn a lot. I hope you gain some value. Please make sure you follow me on my social media. the trading related social media. So like the Twitter, like the Telegram channel, the YouTube channel, the TradingView platform. And because I share analysis on different platforms, so you are updated when I post something. All the links, you can find them on my I'm sure you're more experienced on the trading.live website than me, so you can find all the links on my channel. Okay, you can just press and subscribe on the pages. And of course, for my friends, they are watching us from the YouTube platform. I would like to say again, thank you for your engagement, for your support. I hope here at MarketMinds Mastery, we add a lot of value to your trading and we help you develop as a trader. So continue joining the sessions, and I'll be looking forward to see you again tomorrow at the same time. Happy trading. Bye, everyone.